Hello, this is Ernest Burley Jr., your certified financial planner, your chartered financial consultant, your NFLPA registered player financial advisor. Wait, I'm cutting this intro short. I want to jump right into I keep saying this every week, but I have to give you some of my credentials so you're like, okay, who is this guy? So let's jump right into it. I'm Series 6, 63, and 7. So I deal with investing with clients all across the country, investing, wealth management, financial planning, whether it be comprehensive or basic financial planning, insurance to help people all across the country. I help clients from the north to the south, from the east to the west, all over the country. So I have clients all over the country. So Biff's or Burley Insurance and Financial Services is not limited or restricted by state lines. Now, I want to jump right on into this podcast, right? So here we go. The podcast is titled The Great Debate: Life Insurance for Children. Life insurance for children? Life insurance for children. Hmm. Right. As a financial planner, wealth manager, investment advisor representative, licensed insurance agent, all that good stuff, I'm often asked about various types of insurance. Now, more so on the financial side, I'm more asked about investing and asset allocation and what to do with money and stuff like that. But when we start talking about financial planning, insurance comes into the picture. So people often ask me about insurance because that's part of financial planning. Now, my firm does do all the different types of insurance: auto, home, business policies, church policies, contractors, professional liability, boat policies, investment properties, all that stuff. But I don't get main, I don't mainly get questions on that. Well, no, let me not get my team upset with me. My firm does get more calls on that actually, but my team handles the auto and the home and the business policies, makes basically the property insurance. Me on the financial side of the firm, um, most of the insurance questions I get revolve around things that are involved with like financial planning, even though auto insurance and liability coverage is part of financial planning too, but life insurance, disability, long-term care, stuff like that. That's what I get questions on. So most of the inquiries come from that. And I've had a couple situations just happen this week. I'll touch on those in a minute. But when dealing with people, their money, financial planning and estate planning, life insurance is often brought up, and also sometimes long-term care, like I said before, because that's part of like estate planning. Now, although some of the inquiries come from clients and individuals who refer to me in their 30s and 40s, most of the people who are inquiring to me are like in their 50s and older, 50s, 60s plus, and they wish they would have made better decisions earlier in life because when you're older, things cost more because of your age on the life insurance side, right? So I get a lot of inquiries about that, and I wish people would call younger. But we'll talk about that in a minute. That's part of the question here, the great debate, right? So let's take a look. Therein lies the great debate. When is the best time to get coverage? When is the best time or best age to secure life insurance protection? Now, let's just start with some facts. Um, the younger you are, the less it costs. Facts. We're not going to debate that, right? You're younger, life insurance costs you less. If you're in the better health you're in, the less life insurance costs. Not going to debate that, right? If you're in good health, great health versus not so good health, you're going to get a better rate at great health, right? So now with those facts, that information, based on that information, those facts, what is the answer to the question? When is the best time or age to get life insurance? If we just looked at those two facts, childhood, right? Because you're as young as you're going to be as a child, right? We just said the younger you are, the less it costs. And then you're in your best health you're going to be when you're a child, more than likely, right? So that's another fact. So childhood is the ideal time. Okay, let me turn my ESPN alerts off. All right, so but here's the rub. Here's the rub. Some people say it's a waste of money to have life insurance for a child because the child has no financial responsibilities, and if the child does happen to pass, it won't be like a major financial burden for the family. Well, that's a yes and no. That is true that children don't have any financial responsibilities. But if they do pass prematurely, unfortunately, there will be an expense, but maybe not an expense that will take you under. It won't be too bad, but it will be an expense nonetheless. But that's not my focus. My focus is not that, like a child passing early. Even though I've been in business almost 30 years, so I've paid out on claims for children, young children passing. It does happen, but that's not my focus. My focus is on forward thinking. As a financial planner and investment advisor representative, I look towards the future. I'm like, okay, what are things that are in your best interest and in your children's best interest going forward? Not just now. You can't just think about today. Think about forward. So the best thing is to lock in the rate at the young age of the child and the best age of the child. Cheap rate, healthy child, policies locked in for life, right? Now, I don't want to get ahead of myself. I'm saying this for a reason. I'm going to get to it in just a second as to why that's very important to have a policy locked in for life, as long as you're paying the premiums, right? You don't have to deal with health issues and stuff like that. The policy is good for life, right? Now, by doing that, you give the child an advantage in life by securing the policy very early, right? With a great rate because of their health and their age. Also, normally when I write a policy for a child or a young adult, I add a rider to that policy called a guaranteed insurability option, GIO, or some companies call it a GIR, guaranteed insurability rider. And I've spoken about this in previous podcasts briefly. That rider gives the option for that person, that insured individual, that child to get more coverage later on in life at various ages without a medical exam and regardless of their health. That's thinking forward. That's giving your child a leg up in life by having them have a policy in place in the first place, and then saying, okay, you can increase the coverage multiple times throughout your life without a medical exam. Now, young children they don't have to have a medical exam. But when you get older, become an adult, even young adults, right? You got to go pee in a cup and give some blood because the life company wants to know what your health condition is. So they avoid that with this one policy by having that GIO on there and having the basic policy when they were a child or our child. Now, here's why I'm saying this. I come across so many situations where, I hear someone's called me or I see somewhere online, someone passed at a young age, and now a GoFundMe account is set up. And I'm like, no, no fund me, no fund me, not GoFundMe. So this is something that prepares your child for early adulthood. So when they become a parent and they have their own children and their own financial responsibilities, it's already a policy in place, even if they aren't insurable or the rates are going to be higher when they are an adult or an older adult. The policy is already in place from childhood, right? Now, a young adult, a teenager or 20-year-old in their early 20s or mid 20s, not normally going to be thinking about life insurance. I get it. I understand it. But the parents should. The parents should be thinking forward and saying, okay, man, it will be great to lock in this rate now for the child and give it to them when they have their own family. You can give them that policy and say, hey, I bought this policy when you were 5 years old, 3 years old, 10 years old, 20 years old. And now you're married, you have children, or whatever the situation is, you have financial responsibilities. And this policy is for you. Or a lot of times the parents keep the policy actually. So if something unfortunate does happen, like I've said, people in their 30s, 40s get into some situation and unfortunately they pass. And now they had no life insurance and now it's a situation. So let's not do that. Let's not do that. Let's make sure that we have at least some basic coverage in place because the cost of a policy is less than your favorite meal out somewhere to some restaurant, your favorite salad place, burger place, chicken place. I mean, I by the time I order somewhere, I'm 15, 20 bucks and it's just me, right? I'm gonna give you a quick joke here. It's not a joke, but um, about the cost of meals. And we all know the cost of meals, but there's a funny commercial out there. I like really funny commercials, creative advertising. And there's one out there about not turning into your parent or something like that. And this guy goes into a salad shop. He's stuck in time. He's like old school, stuck in time. And he's just, clueless about the modern world. So he goes in the order. He said, man, you can put all this stuff on a salad, huh? So, tomatoes, croutons, blah, blah, blah. So he makes his salad, right? And then he gets to go pay for it. And he goes to pay for it. He's with all his friends, like 5 or 6 of his friends. They're, ordering salads, and they're all old school. They don't know what's going on. So he goes to pay for a salad. And the guy at the register says, 1987 or 2115 or whatever the cost is for the salad. And the guy's like, well, no, I'm just paying for my salad. Because he thought surely that price was for everybody's salad. And the cashier is like, no, dude, that's the cost for your salad. That's what he's thinking. Like, dude, come on, get a break. Yeah, get a grip. So yeah, just the cost of something like that, much less adding someone else onto the bill, you can get a basic life insurance policy for way less than going out to your favorite restaurant, even a fast food restaurant. So let's not do this whole GoFundMe stuff and not have something basic in place so you don't leave a debt. Leave a legacy, leave wealth, not dust, not debt, not your family scraping by and having to open up a GoFundMe account to settle your final expenses. So that's it. I'm sorry. I don't want to chastise you or anything like that, but I just want, whether you're 5 or 8 or 10 or 20 or 30 or 50 or 80, 90 years old, have something basic in place so your final expenses are taken care of. Just a basic life insurance policy. And the title of the podcast, the great debate. Life insurance for children? Is that feasible? Does that make sense? Is that practical? Yes, it does. Because when that child becomes an adult, you already have a policy in place, and either you've given that policy to them or you have it yourself. And if something unfortunate happens when the child is 25, 30, 35 years old, 40 years old, there's something in place for the child, even if that person was not responsible and didn't get their own policy. You have a policy in place as their parent, as their guardian, as their godparent, or whoever you are to that person. So it's very important. Let's just all do it. It's very, very inexpensive to get that basic coverage in place. And I'm going to leave it at that. Okay. Thank you guys for tuning in. I appreciate it. I appreciate y'all tuning in every week and listening to the podcast. I always get, people telling me that they enjoy the podcast and get good information from it. So I do appreciate that. Please go to my YouTube channel. It's just in my name, Ernest Burley Jr. So if you go onto YouTube, type in my name, I have a wide array of podcasts on there with different topics, anything from real estate to getting your credit straight, budgeting, investing, asset allocation, IRAs, retirement plans, all different types of things. I talk about investing, insurance, financial planning, all different types of things I talk about on my YouTube channel or my YouTube channel. So I ask that you subscribe, that you view the different podcasts in there, something that may be of interest to you, and you forward this podcast to all of your friends, family, church members, co-workers, anyone that you're affiliated with, and ask them to do the same thing, to subscribe and forward the link, forward it to all of their friends, all of their families, all of their church members, all of their co-workers, because I'm sure there's something on there that can help you out. I'm just all about giving information that can educate, enlighten, and empower, just objective information. I have no biases. I just want you to have good objective information so you can make some good decisions for your family, and for yourself. And I think that's about it. Oh, I need to give you my disclaimer. Sorry. To give you my disclosure here. Okay, that's the disclosure. Okay, so I'm giving y'all a few seconds to take a look at that. Hey, it's just us. I mean, hey, I'm just giving information, so I don't have a high budget, so I'm just dispersing information that I think is helpful and useful to the general public. And I hope you guys, get some good information. So that's it for today's podcast. Like I said before, please view, like, subscribe, do all that kind of stuff, and forward the link to others and ask them to do the same. All right. Till next time, y'all take care and y'all be safe out there. No FundMe, no FundMe, please. No FundMe, no more GoFundMe accounts. Let's be responsible. Let's think forward and think about the advantages of life insurance for your child, for your children. Very inexpensive, forward thinking, giving your child an advantage, a leg up in life that most people don't do. Okay, that's it. Y'all take care. Bye bye.